Let's talk Bitcoin today. And of course, who else is starting to dump on us in the market? Well, that is what we're going to reveal today. My name is Paul Barrow. Welcome back into Tech Path. Let's get into a point here I want to hit on, and that is this topic right here of iTrust Capital being our partner. And of course, they are the sponsor for today's show. If you guys are looking at long-term holding for your crypto IRA, make sure and of course visit iTrust Capital. It is the place to go. One of the things you can do with iTrust is, of course, hold not only Bitcoin, Ethereum, all those kind of things, but you can also get precious metals in there. Cool thing here is we are nearing in on the deadline here for you being able to still get a tax advantage from last year before April 15th. So take it up, check it out, make sure and use our link down below. It gives a $100 funding reward if you decide to go. All right, let's go into a topic today. U.S. government transfers $2.1 billion in seized Bitcoin over to Coinbase. Couple of points here to hit on right now is that this is coming from, of course, the Silk Road situation. Government is now starting to move on this. The last confirmed sale by the feds was back in March of 2023. Let me zoom in on that a little bit for you guys. For context, the U.S. government seized roughly 50,000 Bitcoins related to the Silk Road website in 2022. So some pretty big numbers here. And when you look at Zach XPT, he kind of broke this down a little bit. This was the Silk Road hack funds controlled around 30,000 Bitcoin. And they did an interesting test of $69 transferred. The only better one would have been a $420 to a Coinbase deposit address. My guess, of course, is does that mean that we're going to start to see these accounts and wallets on the move? What does that mean for Bitcoin? Could we go a little bit further into that? So you can kind of see a little bit further in of this, and then, you know, people are going, yeah, the guys are just giving me more similar posts. Let me get to it. Yeah. All right. Anyway, there we go. Is that it? Yeah. I love it how the guys will give me the stuff 2 minutes before the show, and then, oh, there's an update we need to drop in here. All right, so that indicates that 30,000 of the Bitcoin is on the Silk Road is now controlled, which is what we've already known there on that. Anyway, let's get into a couple other things here. I want to go into this topic right here, which is Bitcoin at a crossroads, possibly going into the 50K range. Could we see this move into the 53 position? We've got a poll out there as well to kind of get you guys' opinion. Are we going to see a sub 60 or a 70K Bitcoin first, with Bitcoin kind of hanging around the middle? Let me know. Make sure and hit the poll. And of course, if you guys have some questions, make sure and get to those as well. I'll make sure and get our social and rolling as well. So some analysts right now turning historical data into insights with a little bit of selling pressure here. And I think that's the question right now that a lot of people are looking at for Bitcoin. Does it have a potential to edge into that 50K-ish range, 59.5, somewhere in that? I think when you look at two things that we've been watching, of course, some of it is coming from our own market sentiment index. Last Friday, the data on Bitcoin, prior to seeing the little bit of a rise and then the immediate drop on Bitcoin and a handful of other assets, including Ethereum, came through on the sentiment last Friday. So it was something that we did see in advance, and that's starting to showcase again here this week. So we're starting to see a little bit of sideways sentiment and now a bit of a drop in today's numbers on Bitcoin. So do we see potentially more pressure here moving downward? And does that mean that we're going to see maybe a buy the dip opportunity? Others are taking a look at this and simply saying, hey, maybe this is a huge opportunity, because you've got gold now coming in at historic highs. I'll go to the charts here in a second. And the price of gold ascended to pretty much a new level, 2,200, 2,266. Bitcoin, though, is maybe on the brink of significant gains based on this. A couple of things people could look at is kind of this short-term volatility, meaning could we see that sub 60 and then a reversal very quickly? So I don't know how you guys are playing it. Those are some of the things I'm watching for right now in terms of volatility, because this will have some volatility in some of the other tokens that we follow and track quite a bit here on the show. Other things that we're kind of hitting on right here is, of course, ARK is moving continuously in the spot Bitcoin ETF phase. And of course, the one thing that was a little unique is the outflow of 87 million for ARK. This is one of the first times that this has happened. So that in itself, I think a lot of people were looking at and saying, oh, are we seeing kind of a skies falling moment? And there's been a couple of tweets here by both Eric Balchunas and Jeff Safert kind of hitting on this. Let me see if I can go to that one. Yeah, James is kind of hitting on it right here. And the point he's getting at is people kind of freaking out about the ARK drop. But imagine if we start to see outflows on all of these or a predominant number of these ETFs in tandem. And I think that will be the question. But remember, this is like any other ETF on Wall Street. There's inflows, there's outflows all the time. This is how the cycle works. It's also how the investment strategy works for a lot of these investment communities. So I don't think that this is necessarily anything to be worried about. And of course, I'm going to view the queue. I know we got some questions coming in on the side. Make sure and drop some Q&A over there. We'll try to get to some of that before we go off today. Here's a post right now by Swan, kind of hitting on the points of Tuesday, which inflows totaled around 40 million. You had BlackRock at 150, Fidelity at 44, and then you saw that, and of course, then we saw some of the outflows from ARK, and of course, Grayscale at 81. So that was a big one right there. So what was happening in there to cause that offset there, for sure? Other things that are happening out there, here was Eric kind of hitting in on this right here. ETFs took in 196 billion in Q1 2024. This is the second best start to a year ever. The key here that he's talking about is the breadth. And I think that's kind of a very intriguing model when you look at ETFs in general on Wall Street. So this is good because each month was getting stronger. And you think about this, 1,500 ETFs on Wall Street right now, taking in cash, March alone. And this obviously has been one of the bigger, really success stories, I think, of ETFs as it goes, which is one of the reasons I think we're continuing to see BlackRock push so hard into this space, especially around whether it's securitized assets or looking at some of the strategies and moves that BlackRock is taking. The question will be, does BlackRock, do they end up being the one that actually launches the lawsuit against the SEC if they were to deny the ETH ETF? Kind of curious about that. We are going to drop a video, by the way, with Meta Lawman later this afternoon that gets into a lot of this in terms of the regulation scenario and also just the legal outlook for crypto in general. Don't miss it. It's got a lot of very unique information that James Murphy talks on. He, of course, former SEC attorney. Litigator, I should say. Squawk Box hits on this. I want to play a clip for you here. Currency devaluations, people are not really talking about this. I think a lot of people on, at least in our shows, do talk about this. Cathie Wood kind of hits on this whole point. Let me play this clip. It's from about 30 seconds in. Let me go to it real quick. Yeah, let me see if we can set to it. I'll get that over onto it. Let's jump onto that. Let me fix that setting real quick just so we've got an output for you guys. Sometimes if it doesn't go through the cam link, it will freeze up on me. So let me try it again.
Sort of been moving the markets. What's your analysis of why it's moved the way it has?
Okay, up dramatically.
Right.
You have the ETFs. There's something else going on around the world. There are currency devaluations taking place that people are not talking about. The Nigerian naira is down 50-60% in the last 9 months. Egypt just devalued by 40%. Argentina continuing to devalue. I think this is a flight to safety, believe it or not, taking place. A hedge against devaluation, a hedge against a loss of purchasing power and wealth. That's very important. And we saw this even here last year in the United States. Regional banks imploded. Right. Bitcoin went up 40%. Bitcoin does not have counterparty risk. I think, and we're putting out a piece in the next few weeks, which is, this is both, get this, a risk on asset. And so you talk about the NASDAQ.
The risk on.
But it is risk off. I remember we got in at $250 when Greece was threatening to leave the euro, right?
But is that folks that are speculating about currency, or is that folks in Nigeria and in Greece and other places saying, I got to get my money out of this currency and move it themselves? Do you see what I'm saying?
Oh, yes. I think this is an insurance policy against rogue regimes or against just horrible fiscal and monetary policy.
All right, so she hit on all the things we talk about here on the show quite a bit, and that is kind of this leverage into the market around the fiat system. And it's one thing that we've already started to see with the BRICS nations kind of moving in this direction, starting to trade in assets of those countries. That I think will have some bearing on it. And there probably will be more of this flowing into it. Then, of course, you have the nation states. We still don't know for sure if Qatar has not made some pretty significant moves that help drive Bitcoin up to the 70K mark, which is what a lot of people are looking at. Now, you have to look at the clip here by Cathie Wood a little bit like she's, kind of talking her own book. So just remember that is that ARK has an ETF. And if if Bitcoin's going up, that means that ETF is going to be benefiting from that, which means fees to ARK. So that's one thing that all financial managers do have a factor in on this. But it is one of the things that I think a lot of people still today are starting to understand, that the capacity of being able to alternate from the fiat system into, the digital assets scenario is starting to pay dividends in many ways. And that's even with the market having a little bit of correction here. Crypto exchange monthly spot volume doubled in March, reaching nearly 2.5 trillion for the first time since 2021. We know everybody what happened in 2021. We saw an all-time high. And there's been a few points within this. First time it reached such levels back in November. And that was when Bitcoin had come out of the blue and really moved into a position, I think, that set the market into a very unique position. Now, granted, we had that May run up in 21 and then the October-November run up in 21. All those assets that we saw so much of, and I think it also caught a lot of people by surprise because many people, including myself, were looking at 100K Bitcoin. And of course, you have to remember, you had China, the situation that occurred there with pretty much offshoring the mining. I think a lot of that had to do with how that market responded. Now it's a different game because we're dealing with a completely different situation from the institutional capital side. Obviously the ETF being part of that, but now you also have the fiat conundrum that is presenting itself quite a bit more. So a lot happening out there. Tether, of course, goes out and just printed another 1 trill in USDT. Total supply now about 108 trillion, so definitely growing. If you look at the growth of Tether here in the long term, we'll go back here into around last high. There was the May high right there at 60 billion. And then you kind of move up there. I meant billion, not trillion. And then you go up here, and right here in November, we were around 70 trillion right there. And then, of course, the drop off we saw in the bear market, and then what we've seen here recently. If you compare that to USDC, same kind of thing. So digital assets, remember, this is still stable coins. Are we seeing a lot of migration into that? And is this prepping up for that wall of money that so many in Wall Street have been talking about here recently? I'd also want to go over to a clip. Don't forget, smash the like button right now. If you guys like these kind of breakdowns, we'd love to get your input on that. I want to talk a little bit more on tokenized assets. This is something we've been kind of dropping a few videos on. If you didn't catch our BlackRock video yesterday, make sure and watch it. Let's run this clip real quick.
What's the use case? For whom is this a better mousetrap? Why do we need it?
That allows you to represent securities alongside with cash and move them in a very, very efficient way. And that unlocks a lot of utility for securities and a lot of accessibility, instant settlement, eliminates reconciliation problems, manual processes, etc. So that's what tokenization is essentially.
When you make money off of the underlying asset, how do you redeem that incremental addition? Do you get cash? Do you get more tokens? How does it work?
You get a token at the beginning when you purchase a unit on the fund. The token is valued at $1. And then as you accrue interest, we basically will send you to your wallet, which is essentially your address on the blockchain that contains your assets. We will send you more tokens, so you increment the number of tokens that you have there.
And so my understanding is this is on the Ethereum blockchain. Why that blockchain versus the Bitcoin blockchain, which is maybe more well known?
Well, the Bitcoin blockchain is really not useful for the purpose of the products that we do. One of the key functionalities that we use is the fact that you can issue new tokens and then use something called smart contracts, which are basically a set of rules on the blockchain that control how things move around. Most of the products are built on Ethereum and not on Bitcoin. Bitcoin is more of like a store of value asset and not really a blockchain where you can build other products on top of it.
So some big statements here. Remember, this is on CNBC, and this, I think, is starting to wake up Wall Street in the sense of what securitized assets are. And that company, Carlos Domingo, CEO of Securitize, the company that is working with BlackRock, for what they're doing with BUIDL. And I think this is kind of that next big step that really starts to shake up the financial markets. And of course, all of this riding on Ethereum. They'll have to end up buying Ethereum, which means gas fees for those holding it. And also, I think, to a certain extent, because the amount that's going to be in these assets will continue to climb, possibly very, very quickly. I also want to get into a clip here talking about BlackRock versus banks, because this starts to change the dynamic of how this all may play out in the financial system. Listen in.
This is a public blockchain that we're talking about. And we've seen JP Morgan go the route of a private blockchain. For example, what was the decision process in terms of picking public versus private?
Well, so banks are subject to different regulations than, let's say, asset managers or us. We're a registered transfer agent with the SEC and a broker-dealer. We're subject to SEC regulations. Banks are subject to OCC regulations. And currently in the US, the OCC is recommending banks not to use public blockchains. We don't have the same kind of restrictions. And I do believe that public blockchains is where the innovation will happen because of the compositability of being able to do things on top of it, etc. If you want to understand the differences, it's similar to when internet started and you have, American Online and MSN that were closed, and then you have the public internet, and the public internet is where the innovation happened, right? Because anybody could actually build things. And unfortunately, banks have restrictions, and they're still trying to be innovative, like JP Morgan with Onyx, but subject to what the regulators allow them to do.
So he hit on a lot of very interesting points here. One that I had a chance to talk with James Murphy on. And there's some intriguing things here, because you have to understand this whole idea around choke point. And if you guys haven't, learned about crypto and choke point 2.0, understand that. Go out and search it on YouTube. You'll find quite a few videos about it. Arthur Hayes been kind of notorious about talking about it. But the point is that it really limits on and off roads. And you look at ramps and where that's going to be going. The biggest issue is a lot of these entities, companies. And that's potentially going to be the first set of businesses that start to take advantage of this with BlackRock, simply meaning they'll be able to use this as a bank to be able to secure and do it on the Ethereum blockchain. That's pretty big. And it also slides in the face for what's been happening here recently with Custodia Bank. If everybody remembers, Custodia was denied by the Fed getting the approval. I know some of this gets complicated in the finance side. The good thing is this is positive for Ethereum. And I think BlackRock, along with many others on Wall Street, have, they've started to see the writings on the wall, and it's definitely coming in. So what would be next up? Well, the question is still for the market, are we going to get a Fed rate cut? That's one of the questions that everybody's asking, whether it's May, June, or further into the year. Here's Chair Powell talking about this very issue after his remarks. Listen in.
He says if the economy evolves as expected, it will be appropriate to lower rates at some point this year. But the Fed chair, speaking at the Stanford Graduate School of Business, says it will not be appropriate to lower the policy rate without greater confidence inflation is coming down. He cites the Fed policy statement in making that comment. He said the Fed has time to let incoming data guide its decisions. And the policy rate, though, is likely at its peak. That's the good news. Inflation, he says, has come down significantly, but it is still running above the Fed's 2% target. The job of sustainably returning it to target, quote, is not yet done. Then he talks about the recent economic reports on jobs and inflation. They have come in, he says, higher than had been expected, but they do not, quote, materially change the overall picture.
So a little bit in the way of Powell's statements is that this is maybe slightly bearish, I guess, when you look at the most recent FOMC, which was very, very dovish and looking at potential more rate cuts throughout the end of the year. And I think the key here, I'm not worried about the timing. I think it still is most likely going to happen. The key here, of course, is going to be the elections, along with some other factors that play into this in the Q4 around earnings and things of that nature. But also the macro side of it, especially around inflation, all plays into this. So it's very interesting right now to see this and whether or not it's going to play out. One thing that is kind of working against that right now is this right here, and that is U.S. companies added 184,000 jobs in March, and this is beating the expectations of 150. So that's significant. If you think about this is another 30% above. That's a high performance. So remember, February's number was also revised upwards, so wage growth accelerated. That's a big deal. And we've also seen a large amount of, everything from minimum wage being affected, shifts in dynamics around a lot of these states. This is getting very interesting for sure. Last up here was Marty Party kind of hits on this right here. Powell wants to print another bill in U.S. Treasuries. Tether, of course, mints another bill in USDT 5 minutes ago. So that simply means if we continue to see the printers going this direction, guess what, guys? Digital assets are going to see some pretty good activity. We're going to get over to the poll real quick. I want to get you guys' opinion on this. Let's see what the audience had to say about this. All right, here we go. What happens first? Bitcoin falls below 60. Ooh. Hits 70. Or dog with that. Flip Shiba. All right, well, at least people are a little bit more serious today, so that's good. So everybody's looking at the 70K mark. I shouldn't say everybody. It's a close run, 44 to 43. Come on, guys. Let's vote it in. We'll take a look at the end of the show. Let me get to a few questions. All right, here we go. Dr. J, is PBN3 all in, or do you still have cash on the sideline for buying the dip? Well, I'm always reserving cash, for those unusual points in time. Do we get another one of those? I just don't know. It's a tough one. But I don't know. This is a question and a topic we talk about here in the Crypto Pit quite a bit with our research team, is where is that balance of fiat mix and digital asset mix? And you guys kind of know what we do a lot. By the way, if you want to see a little bit further what we do, join the Diamond Circle. Get in there. It's the best place to go. Joey says ETH won't be labeled a security. Stop worrying. So I wasn't worrying about ETH being a security until today, when I had a conversation with an SEC attorney and someone who's fought the SEC front and center for years, decades. And some of the things that happened on these launched investigations, he brought up some very, very good points on it. And I think that's something you have to be considerate of. But at the same time, there are validations, I think, that still put ETH as a commodity and that will be eventually controlled by the CFTC. Not that would be much better, but it will be away from Gary Gensler. Not a fan of ETH, but the SEC is supposed to be concerned with consumer protection. Yeah, forget that. I don't know anyone who's been rugged by ETH, but the SEC definitely needs to go after more projects that steal. I totally agree with that, Selena. So kudos to you, and you are exactly right. Let's see, what else do we have here? Go fast. Let's go with that one. Yeah, is Grayscale getting out of Bitcoin ETF market? Seems like they're dying and would not be good for bulls. So remember, Grayscale has the largest fees until they just realize, guys, you got to adjust the fees. I think they could save some of that business. Remember, they still hold a ton of Bitcoin. So the key here is managing those assets under management and the fees that they're taking. They have to get in the game. It's difficult for companies to do that after you've been basically cash cowing for so long, which is what Grayscale has been doing. All right, so what are your thoughts on Arbitrum and Matic? They've been very underwhelming along with ETH lately. That's been a struggle. I think Matic is it's one of those forces of nature because of its layer 2 capability within the ETH ecosystem. It's very needed. And if you're going to play in the ETH playground, Matic is almost a must-have. So there are situations. I still like Base, but at the same time, Base has its own challenges, just in terms of dealing with that. I still look at Solana, and then you go, well, Solana's struggling with certain congestion. You got Zeus coming in tomorrow. That's going to be another huge airdrop. Likelihood is we got projects all over the place that are already paying exorbitant fees on Solana. Then you got Avalanche, okay, still rolling out subnets. There's a lot of movement in the space right now. Hey man, thanks for this, Dave. Thanks for the congrats on 420. We're trying to get there. That was a big fun one. 420K subs. We loved it. You'll get the joke. Yeah. Governor will never give a warning that they're selling. Here's the one thing. Yeah, we talked about this again today in our team, and I kind of agree with this. I don't think that, unfortunately, I don't think the government is too sharp. I think, now granted, there's some sharp people there, but listen, they're understaffed. It's hard for them to really get a head around what's happening out here. I'm not saying they can't, but believe me, they're going to dump. They're going to dump. I can't vote for dog with a hat beating Shiba. For sure, Mu is going to beat both of them. Mu, we talked a little bit about Mu for you token, or for you meme coin lovers out there. And all right, there we go. States in the U.S. have been asking Cardano about voting on the Cardano blockchain. They're just saying they're doing things. You know, we played a clip yesterday in our show with Charles Hoskinson. And the only thing that I argue with that is the liquidity issue that Cardano is going to face if they do not adopt a stablecoin. And that is a problem that still is not being addressed. And I think the community is probably agreeing with that for the most part. BlackRock and gang will buy all the dip and all the dump coins by the U.S. government. Well, it doesn't really go by BlackRock buying it. It's the investment houses and the private offices and family offices that are coming into, that, assets under management that are directing that. They just have to go to the market and buy it to back it up on the cash equivalent. So that's the thing I think that will play into this. Okay, if you guys are not in our Diamond Circle, make sure and get into that, because it is the place to get additional content, stuff we don't do here on the show. And if you're not following me on X, follow me on X right now, make sure and do that. It's just @PaulBaron, and I'll catch you next time right here on TechPath.